Oil has risen above $95 a barrel for the first time since November last year. That's as Saudi Arabia and Russia signal their will to continue with their price cuts, and also as signs of a potential economic recovery boost sentiment. Prince Abdulaziz bin Salman, Saudi Arabia's energy minister, insisted on Monday that the kingdom's decision this month to extend oil production cuts to the end of the year was not about jacking up those prices. But despite this, Wirth, the chief executive of Chevron, said oil prices are now set to break the $100 a barrel before the end of this year. The International Energy Agency also added it expects a surge in Chinese demand in the next few months. For more on this now, let's go to Han Tan in Abu Dhabi. He's Chief Market Analyst at Xinity. Thank you very much for joining us today. Han, are we really expecting a surge in Chinese demand, as we were saying, after the teetering economic signals that we've been seeing out of the world's second largest economy?
Right, so I would employ perhaps more tempered language compared to the IEA's in saying that I'm hoping for a more stable footing for China, right? Hoping that the worst of its economic troubles are behind us. Although, to be fair, the IEA does expect China to account for about 3/4 or 75% of the growth for oil demand this year, with global demand forecasted to hit an all-time high this year, right? So I think, in other words, for me personally, a solid footing for the world's largest importer of oil should help it play its part in supporting global demand, and then by extension should offer a supportive element for oil prices.
Right, and talking about the supply side and that price range as well, do you expect Saudi Arabia to extend the cuts in the coming months, but also well into next year? And if so, what price range do you expect at this point?
Yeah, look, at this point, as you mentioned in your intro, those predictions for $100 Brent are making the rounds again, and I think it is very achievable by year end, especially if demand out of the world's two largest economies, namely the US and China, they can stay solid. So in terms of the 2024 moves, I think whether Saudi Arabia and Russia will, whether they will prolong these supply constraints, I think that will depend on the state of the global economy, right? Given that there are still calls for a recession for the U.S. and perhaps some headwinds for the global economy. So I think what Saudi Arabia and Russia decides beyond that will depend on the state of the global supply demand over the coming months.
Right, it remains to be seen what that $100 a barrel will have impact that will have on inflation around the world. Han Tan, thank you very much.
Thanks for having me.
And now let's go to other top business stories from around the world. The United Auto Workers Union is preparing for more strikes to US plants if no progress is made in their contract negotiations. The union is on its fourth day of strikes against three US car manufacturers, Ford, General Motors and Chrysler, demanding more pay and benefits. Almost 13,000 workers have walked off the job. Instacart has priced its initial public offering at the top end of its range, raising $660 million from the listing. That values the US grocery delivery company at about $10 billion. But the figure is well below the $39 billion valuation the company received in its last private round more than 2 years ago. And the Chinese property developer Country Garden has reportedly won approval on the last of a batch of 8 local notes it stretched out payments on. According to Bloomberg, creditors voted in favor to extend the maturity date of the $67 million onshore bond by 3 years. Earlier this month, the embattled company made a last-minute coupon payment to avoid a default on dollar securities.